That would mean that you're going to be paying somewhere around $29.50 per month for your upstairs portion. Today's video, we're going to break down how much it will cost you as a first-time homebuyer to buy a bungalow in the Scarborough Bluffs area. We're not just going to be talking about any regular bungalow though. This bungalow is going to have a separate basement apartment that you're able to generate income from, and it doesn't matter if the apartment is a 1-bedroom or 2-bedroom space. We just want to be able to maximize cash flow into this property while you live cheaply upstairs. Now, a great thing about house hacking and living this way is the fact that your monthly carrying costs will be almost cut in half, and you'll also find that what you're paying for your part of the mortgage, which is not covered by the basement tenant, will likely be less than what you would otherwise be paying if you were renting somewhere else, or at least on par for that matter. The further out you go, say Durham for example, then your portion of the mortgage would be even more affordable as well. Really quickly, house hacking is a real estate strategy that involves earning income from your home without having to sell it. So you can do this by either renting out a room or a portion of the property. In this case, we're going to be choosing to rent out the basement, and then we also want to find a property that has been fully renovated with a finished basement suite so that you can enter the market with less money and don't have to waste any additional funds by completing any renovations yourself. The huge advantage for house hacking is that it can help you build equity in your home while a tenant pays off your mortgage, and you can actually shave off a ton of years when it comes to the amortization or the lifetime of the mortgage if you are savvy and taking advantage of your prepayment privileges. Now that we're done with the basics, we're going to hop on to House Sigma and find a property that fits with the description that I've just gone over, and then we're going to throw all those numbers into a standard mortgage calculator online to see just how much money we will need to make this dream a reality. Okay, so the property we found is located at Midland and St. Clair Avenue East in Scarborough, Ontario, right by the Bluffs here. The nice thing about this location is that you have the Eglinton GO train right around the corner from you. Now, this property was sold for $900,000 flat. It's a 3-bedroom, 2-bathroom home with an additional 2 bedrooms in the basement. These would likely rent anywhere from, call it, $2,000 a month on the low end to around $2,300 per month, give or take. So I'll throw all of this into our mortgage calculator now. I like this one offered by Rate Hub. It's simple and easy to use, so we will start with the purchase price of $900,000. Our down payment will follow the minimum down. So recently, the Canadian government passed some new rules that amortizations can be extended to a length of 30 years for first-time homebuyers, in addition to having insured mortgages up to $1.5 million, when the cap was previously set at $1 million. This change really allows people in Canada's larger urban markets like Toronto and Vancouver to stay local and to not have to venture too far out. I don't think that everybody should opt for the 30-year mortgage, but I think if you do this and prepay $10,000 per year if it's in the budget, then you'll find that you can actually cut almost 10 years off the total lifetime of the mortgage. I'll go over this a little more in depth shortly to also show you how much money you'll be saving if you take this route. Getting back with the example, we're going to be doing the minimum down, and these are the interest rates that are currently available in the market. We will stick with the 5-year fixed interest rate since you're a first-time homebuyer and you want that stability. Although the variable product has been becoming a little more popular in recent months when they really went out of fashion during that interest rate hike cycle. Payment frequency, we're going to be doing monthly, and you'll see that our mortgage is going to come out to around $4,500 per month. Now, we'll check off that we're first-time home buyers, and next up, you're going to see land transfer tax. Since we're buying in the city of Toronto, it's going to be quite high, and that's because you have to pay the tax twice, which is just so annoying. You have to pay the provincial tax and the municipal land transfer tax. You do get a rebate of around $8,500, but this amount is still very small in the grand scheme of things. Next, you'll see your down payment will be $65,000. Land transfer tax is going to be $20,500. Tax on the mortgage insurance is also going to be just below $3,000, and you'll see the other costs like legal fees, title insurance, home inspection. So the total cash that we're going to need to close is going to be $91,000. I totally get it. If you're doing this by yourself, it may look like a daunting task and very hard, but if you're buying with a partner, whoever that person is, then you'll need $45,000 each at the end of the day. Keeping with the example, to look at the overall carrying cost per month for this space, property taxes per month is going to be around $300. Utilities are going to be around $185 per month. Depending on how efficient your home is, then it may be a little bit more than this, but keep in mind that the basement will be paying a portion of the utilities per month as well. Property insurance, $50, and again, this will get us to a grand total of basically $5,100 per month. Now, if we deduct the rent that we're going to be getting, it's going to be anywhere from $2,000 to $2,300. We'll use $2,150 for this example. That would mean that you're going to be paying somewhere around $2,950 per month for your upstairs portion. Now, suppose that you were just going to rent a 3-bedroom main floor apartment in a similar style house and in the same area. You're going to be paying anywhere from $2,900 per month to $3,200 per month for this space. A big factor that we also have to consider here is the opportunity cost of renting and being able to have a fluid and flexible lifestyle where you can come and go as you please, or being in the market and having a house and the responsibilities that come with it, both from a physical maintenance perspective and monetary maintenance perspective. The outlook for 2025 freehold properties is pretty encouraging, and most people think that we'll have home price gains in between 3 to 6% here in Toronto proper. Remember, never bank on appreciation occurring, but if it does happen, that's great. You do have to remember to always buy within your means and have that long-term approach, anywhere from 5 to 7 years at a minimum. And take advantage of opportunities like this to potentially get into your first property if you don't want to go the condo route. Lastly, if we go back to the prepayment scenario, you'll see that you'll save almost $170,000 by taking advantage of these prepayments. This is because all the money that is being prepaid is going directly towards a principal amount of the mortgage balance and not the interest portion. I really hope that you found value in today's video, and I look forward to seeing you guys soon. Peace.